get smart, use the tools at your disposal like we're using, and keep a lot more of your money and stay in control of where it goes, how it's spent, how it's deployed. And at the end of the year, you have your taxes done, pay your bill, and keep running and gunning. I'm not saying be reckless. I'm saying be a business owner. Stop being an employee. Employees are big kids. They need someone else to give them a paycheck and tell them when to show up. And there's consequences. When you go to daycare, the teacher tells you if you sit in timeout, do this. That alone for me is enough to figure out how to pay my taxes on my own, which has been easy. I have way more money to work with now because I don't work for someone with a fixed wage. I can make unlimited amounts of money. So I'm able to move and shake as needed. There's so many different strategies for taxes, different things. The first step is becoming an entrepreneur and getting the ball rolling. Even for the first 2 years, which is what most businesses go through. Most small businesses don't profit for the first 2 years. That's just what the average in the USA is. First 2 years, they bought all this equipment, maybe built out a building, got employees. They're going to go in the red. Our business moves a lot quicker. We don't have a lot of these expenses because we're an internet business. We're going to move into profitability way quicker, and you're going to be able to utilize that money and grow your business unlike anything you've ever seen before. It's so hard to explain to someone that's never earned outside of a W-2 wage because they realize you get all that money in and then you get to make your choices. Hey, you could still put it in a little savings account over here, or at least make a tally of what you need to pay. It's time to pull the Pampers up and be a big boy, big girl. That means taking care of your own taxes.
And you also should have priorities on what sort of investments should be at the top of that list. And I think financial discipline is
Most people lack it.
And that's one thing I want to talk to you about. You should be investing the money on vehicles that are income producing assets at the most ideal level, because then you're taking that money, putting it into vehicles that can start making money while you sleep.
Overall, growing your business, like that could mean a ton of different things. If you have a successful coffee shop, that might be opening another coffee shop and deploying that capital that you're going to get taxed on, deploy it elsewhere. Or you buy an apartment complex. People don't know this, but you could depreciate. Let's say I have a taxable bill of $4 million this year. I could buy an apartment complex and I could depreciate that complex. I could depreciate 100% of it if I wanted to, giving me a zero taxable income. That 4 million that was my, let's just say my net income, doesn't necessarily mean that I'm not going to have taxes to pay out of that. There could be some tax liabilities or whatever. It's just that you have to see the lobbyists have set up different things to move different industries. If you keep it in your industries, you don't have to really learn to take advantage of these depreciations. When I bought my G-Wagon at the end of 2020, I paid $70,000 less in taxes that year because I depreciated it because it was over 6,500 pounds. I didn't pay cash for that one. I wanted my cash flow. So I actually took a loan out for like 100 grand or whatever. I put some down and it saved 100 grand, and I depreciated the whole car purchase, which was like 130, 140 bucks, my taxable bill. So there's so many little things, especially if you get astute accountants that know what they're doing in the market you're in or the state you're in or the country you're in. There's so many loopholes that have been put there for reasons. Like lobbyists went to bat to get this because somehow they benefit from it. That's just what it is. It's like they said back in the day when it was George the Son Bush,